There are a lot of things at play right now. We've seen this play out before. Why are oil prices lower given the heightened geopolitical risks at play?
I think the main reason oil prices have come off this morning is the fact that everybody seems, and that's very much our view as well, to view the Iran attacks as a one-off. Neither side still wants war. We believe that very strongly. That's been our core view. Ultimately, Iran wants to play this out over the long term, and the main goal for Iran really now is to get U.S. troops out of Iraq. This was what they call a proportional response. No U.S. lives were hurt from at least what we know so far, and that's clearly a red line for the U.S. Of course, we will have to wait and see to see what. Sorry, go on. Yeah.
No, I was just going to say, you said that's clearly a red line. So are those red lines or lines in the sand the ones that we are watching to see any kind of a potential upside, a real upside catalyst to oil? Or can we expect to see these one-offs pump oil prices higher only to have them fall off again?
So I think that's really going to be the thing to watch over here. We are recalibrating red lines, and I think that's the phrase I would use more than anything, because, again, Iran had to do something. Khamenei came out and said that himself. But the U.S. response has been pretty muted. We have to wait and watch for what Trump says this morning. But if both sides de-escalate from here, then that's it. And I think Iran knows very well that if they do attack U.S. personnel, then there will be a retaliation. And I don't think Iran is ready or willing to necessarily fight superior U.S. forces. So they are going to be very strategic about how they respond. But ultimately, I think it's going to be Iraq where this is played out. And that's why, to be honest, it's Iraqi production, the long term, not the short term, but Iraqi production that can be at risk if sectarian violence really picks up.
So let's talk about the OPEC role in this. We heard Secretary General of OPEC, Mohammed Barkindo, mentioning the idea that to the U.S. perhaps, that OPEC cannot shoulder the burden alone for oil supplies. The talk is now shifting very much towards supply here. Is OPEC still concerned about global demand as well?
I mean, look, they have to be, right? Global oil demand last year growth was barely 800,000 barrels per day, one of the slowest we've seen last decade. But this year, there are signs of green shoots. Auto sales are picking up. There's more fiscal stimulus. Even South Korea overnight announced a big fiscal stimulus. So things shouldn't be as bad as last year. But of course, we're not expecting runaway growth either. As long as growth stabilizes, I think OPEC can manage this market, unless, of course, there's a big disruption. And that's why I think Barkindo said what he did, because we don't have enough spare capacity should Iraqi production be affected. And I think that's very, very fair. I think the market is still underappreciating just how tight it is, given how low crude oil stocks are and how low spare capacity is. But of course, this market, we've seen that during upkick in September. Gotcha. It really needs to see proper disruption before prices go up.